Bum bum bum. Let's get this episode done. Welcome back to the channel. Like always, my name is Jose Najarro and I am a self-taught investor looking for new investments to grow my long-term portfolio through fundamental analysis. I am very excited about today's episode. Today we are going to talk about AvePoint. Yesterday I did more of a fundamental analysis on AvePoint where it's probably a 20-minute video where I go about everything from their customers, the products they hit, and the type of company AvePoint is. On today's episode, I got a lot of questions yesterday on that. First question is, what kind of tier position is there in my portfolio? For those that are new to my channel, I have 3 tiered levels in my portfolio. Tier 1, Tier 2, Tier 3. So I'm going to explain what tier AvePoint would be in my portfolio. The second thing I kept getting asked is, what is a great entry price that I'm going to start in? What is going to be my price point? So those 2 topics are ones I'm going to talk about today. But before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm and it truly means a lot to me. Like always, on the description and the pinned comment, you should see a link to my Discord channel, which is free to anybody that wants to join. I post every time I buy. I post every time I sell. I have over 1,000 members in there and we have a great community going on. Also, you should see a link to Webull. If you sign up there and deposit $100, we both get a free stock. I think they might be doing a special right now where we get 2 or 3 stocks if you signed up today. Also guys, make sure to check out my second channel, Jose Najarro Entrepreneur, where I pretty much talk about other ways to make money or other ways to become successful outside the stock market. And if you want to continue to support the channel, make sure to check out the merch, Self-Taught Investor. I'm pretty sure most of us here are self-taught and this is the perfect merch for you. All right, so let's start off with my tier list. For example, so like I mentioned earlier, I have 3 tiers in my portfolio. I have a tier 1 stocks, I have tier 2 stocks, and tier 3 stocks. Tier 1 stocks are my favorite stocks in my portfolio and usually have the biggest position size per holdings in my portfolio. Then they go down from tier 2 to tier 3. First, let me say this. Even though tier 3 might be the worst, I still consider it a strong company, right? All of these are strong companies. I'm not going to buy companies that I don't believe are going to beat the overall market, that I don't believe are in a great fundamental place right now. So here I'm going to show the differences. And I feel like this is the major thing. I get a lot of people where ask me, tier 3 stocks, why are you investing in tier 3 stocks if tier 3 is the worst? No, this is still better than the overall market in my eyes. So they still have great potential. The only thing is maybe the future I see of them are I don't have the full understanding as of yet right now, or the market just doesn't excite me, but I still want to hold them because they're going to do better than the overall market in my opinion. So first I have the 3 tiers and here I kind of ranked them. So I have 1 would be the best, 2 would be strong, and 3 would be okay. And the reason I'm doing this is because later on we're going to do this for Avepoint APXT right now and see where I would consider it. So the first list, high growth or disruptive market. I wanted to see high revenue growth, or if sometimes you might not see that high revenue growth because it's in a disruptive market that is going to start grabbing that revenue, right? So that needs to be number 1, the best. Strong balance sheet. It needs to have a strong balance sheet, great cash compared to debt if it's not profitable. And if it is profitable, it's okay for it to have some form of debt with it. So strong balance sheet needs to be the best all around in all tier 1, tier 2, tier 3. Strong cash flow and earnings. Strong cash flow and earnings doesn't mean that it needs to be profitable right now, but I need to see improvement. It needs to be profitable or cash flow from operations positive in the next 2 to 3 years. So again, that needs to be that needs to be 1 across the board. So this is, and the other similar is, do I believe it will beat the market in form of returns? The answer for all 3 is yes. These are where I end up differentiating where they're going to go in my portfolio or how much holdings. The first one is my understanding of the market. 1 being best, 2 being strong, and 3 being okay. So you can see even 3 means okay, that I understand the market and I'm able to talk about it. For example, you will never see me have in my portfolio a single biomedical or biopharma or pharmaceutical company because no matter what, how much studying I do, I don't believe I would understand that market. So that probably be like a level 10, right? So for me, even a 3 means okay. It means I understand the market and I'm able to talk about it. So you can see my tier 2 would have a 2 there. My tier 3 would have a 3 there. My understanding on the product. Now, am I able to talk about the product? Do I understand the solution they're doing? How well do I know it? Do I know it the best? Can I talk about it for like 15 minutes straight? Do I know about it strong? Can I talk about it for about 10 minutes? Or do I know okay enough about the product that I can talk about it for 5 minutes, right? So again, I still have understanding of the product. And then the final thing is my overall excitement on the market and the product. Am I super excited to own this company based on the markets they're hitting and based on the products that they have? So those are the major differentials between my tier levels. Again, we saw they're all fundamentally strong in my opinion, and they all will beat the market in my opinion in the long term of things. So now let's take a look at APXT, AvePoint, which I believe will be ticker AVT. I forget, I know I mentioned that in the previous episode, but right now it is APXT. So the first thing we're going to take a look at, does it have high growth or is it in a disruptive market? So here, if we take a look at the slideshow that I showed yesterday, is for this year, it's expected to grow its revenue 25% annually on average this year. And for the next two, up to 2022, between 2019 and 2022, the compound annual growth rate is about 30%. So this is a high growth company. The second thing we see is for this year of 2020, they are seeing profitable earnings before interest and taxes margins. So they also have a strong form of either cash flow or earnings right now. So obviously the first thing is I'm going to give a number one on high growth. We're seeing strong growth and we're also seeing strong cash flow. We're seeing an improvement on their tier earnings. Next, I want to take a look, does it have a strong balance sheet? Again, in this slideshow that we took a look at, we saw that, hey, this company has enterprise value of 1.7 billion. So what is enterprise value? That is the total market cap plus any debt minus any cash they have right now. So here they give you the equity value minus net cash. We can see one thing from here, that they are not adding any debt. So that means this company right now does not have any debt based on these numbers right here. And they have an outflow of cash right now, which means this company has enough cash to pretty much pay off, to pretty much be able to survive as it continues to grow. So now we see that yes, it has a strong balance sheet. So we're gonna give it a 1 point there. So right now we can see it meets all my fundamental criteria, where it's in a high growth market, it has strong balance sheet, and it has a strong cash flow or positive earnings. Next, my understanding of the market. What is the market expansion? How is it expecting to grow? Right now, the overall market is trying to grow. It's pretty much trying to grab users from that Microsoft 365 user base, right? So right now, they own about 3% of that user base. They're trying to grow it about 10%. The reason they're trying to do this is because they pretty much create this bridge between the overall, what Microsoft Cloud offers and what the enterprise world requires. They create that bridge. So for them, the main market they're trying to hit is that Office tools, those Microsoft 365 tools, to be able to create that bridge to show what the enterprise requires. So I do understand the market they're hitting. It's not my best understanding of the market, so I'm going to give it a 2 there. Next, my understanding of the product. What do I understand about the products? They hit 3 major products. They hit the transformation, the governance, and the compliances. My favorite here is the compliances. Here they have to, for example, they're working with a lot of security things. They're making sure that things are going well with audits. They're being handled correctly in form of security and protections in the form of classification of that data, the management of data. So this is stuff I see in my everyday life at work. So I understand the compliance and the governance plays. The transformation is pretty much moving is pretty much migrating its data to cloud. I'm not too familiar with the transformation. I do want to say with the compliances and the governance, I am very understanding of these solutions. So here, for my understanding of the products, I would give it between a 2 or a 3. My excitement on the market and the product. Again, it's in a SaaS-based company. I love that reoccurring revenue. I love that revenue that keeps coming in, and it's a revenue they don't have to work for anymore. I'm also liking how they are working with Microsoft right now. They're one of the biggest partners. They're one of the biggest makers. I think they are the biggest research development on Office 365 outside of Microsoft. So they do have this strong collaboration. At the end of the day, I'm not superly excited about the market or the product itself. So I'm gonna give it somewhere between a 2 or a 3. So right now we can see APXT or AvePoint, whatever, I forget the new ticker is gonna be, is not going to be a tier 1 stock for me. That is not the thing. I don't think, even if I continue to understand more about the product or understand more about the market, I don't think I will ever be as excited as I am about esports, as I am about gaming, as I am about the e-commerce site or the fintech market, regardless of how much more I understand that market or product. So the final thing is, do I believe it will beat the market? To me right now, the company officially merged at the $10, at the merger price of $10, will give the company a valuation of $2 billion. For me right now, based on this future revenue growth, the type of revenue growth they're seeing on 2022 estimated revenue of $257 billion, I would buy anything below a $3.2 billion valuation. With the $3.2 billion valuation, I believe in the long term of things, I will have enough leeway to pretty much do better than the overall market. I think the higher I go above $3.2 billion, the more I expect to beat the market a little bit less and less and less. This doesn't mean my sell point is about $3.2 billion. And that $3.2 billion is about $16 in the stock price right now. This just means that for me to enter a position, normally when I buy a company, I'm looking for long-term positions for the next 5, 6, 7, 8, 9, 10 years from now. And that's about $16. For a long-term position, a great entry price for me, it would be anything below $16. Then after that, it would be more of dollar cost averaging. If I want to increase my overall position size, I would dollar cost average and buy a little bit here every other week, maybe every other month, maybe every other dip, I will buy into this company. So this is my current plan right now. Anything below $3.2 billion, anything below $16 would be something for me as a long-term position where I believe in the next 3 to 5 years, I would be better results than the overall market. Again, anything higher than that doesn't mean it won't be, but I just believe my risk is a little bit higher there. One thing I do want to say is this is a SPAC company. We see a lot of hype with SPAC companies. So sometimes I want to make sure it's not overly extended. So because we do see a pullback after most of this hype is done. So I do want to say this is going to be a very volatile stock in the upcoming months, in the upcoming weeks. We might see a huge pull up, and then after that, we might see a huge pull down after that huge hype goes down. But to me, I mean, we've seen it with most of these SPAC companies lately. All of them have gone up high. For me, make a plan, have a plan, and understand your plan. If Monday comes and it might go up to maybe even higher, might open up higher than 16, I might open up with the smaller, maybe a quarter position size, maybe a 1/5 a position size, just to have some skin in the game and keep track of it. But I will not go any bigger at over $16 price right now. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. Make sure to let me know in the comments, what are your thoughts? What is your entry position? What are you happy buying it and why? What do you believe this company will be worth? Remember, they're only expecting about $257 million in total revenue of 2022. So make sure to be reasonable with that valuation you give. And take care, guys. Again, have a good night and see you next time.